Have you noticed the headlines about precious metals lately? While gold has been breaking records throughout 2025, there's another metal that's quietly stolen the spotlight. Silver has gained an absolutely staggering 143% since the beginning of this year, climbing from around $30 per ounce in January to over $70 by December. Compare that to gold's 71% rise, impressive in its own right, but only about half of silver's gains. So what's driving this extraordinary performance? Let's break down exactly what's happening in the silver market and why this metal is moving so much faster than gold. To understand silver's outperformance, you need to understand what makes silver fundamentally different from gold. Think of gold as primarily a financial asset. People buy it for investment. Central banks hold it as reserves, and it's used in jewelry. But silver? Silver is playing two games at once. Yes, silver is a precious metal and a safe haven investment just like gold. But here's the crucial difference. Silver is also an industrial metal. More than 680 million ounces of silver are consumed annually in industrial applications. We're talking about electronics, where silver's conductivity is unmatched. We're talking about solar panels, where silver is absolutely essential. And we're talking about electric vehicles, AI components, and emerging technologies that are hungry for this metal. So when investors rush into precious metals seeking safety, both gold and silver benefit. But silver gets an additional boost from industrial demand that gold simply doesn't have. It's like having two engines pushing the price higher instead of one. Now let's talk about supply, because this is where things get really interesting. The silver market has been running a supply deficit for 5 consecutive years now. That means global demand exceeds what miners can produce year after year. And unlike other commodities, you can't just flip a switch and produce more silver when prices rise. Here's why. Most silver doesn't come from dedicated silver mines. Instead, it's extracted as a byproduct when companies mine for other metals like copper, lead, or zinc. This means silver production is tied to the economics of these other metals, making it slow to respond to silver's own price increases. At the same time, we're seeing physical inventories drain at an alarming rate. London's precious metals vaults, which are basically the Fort Knox of the silver world, have seen their holdings drop by about 1/3 since 2022. They've gone from 31,000 metric tons down to just 22,000 metric tons. That's a massive amount of metal leaving the available supply. The investment side of the equation is equally dramatic. Exchange-traded funds backed by physical silver have seen unprecedented inflows in 2025. By mid-year alone, 95 million ounces had poured into these funds, already exceeding the total for all of 2024. These holdings now total about 1.13 billion ounces, worth over $40 billion. And here's what makes this so impactful. When money flows into a silver ETF, that fund has to actually buy physical silver and lock it away in vaults. This isn't paper trading. Every dollar going into these funds removes real metal from the market, tightening supply even further. It's creating a powerful feedback loop where rising prices attract more investors, which removes more supply, which pushes prices even higher. There's also a fascinating historical pattern at play here called the gold-to-silver ratio. This measures how many ounces of silver it takes to buy 1 ounce of gold. Back in April of 2025, this ratio spiked above 100 to 1, meaning gold was dramatically outpacing silver. But here's what history teaches us. During precious metal bull markets, silver typically lags gold at first, then experiences explosive catch-up moves. And that's exactly what we've witnessed. As investors recognized that silver was undervalued relative to gold, capital flooded in. The ratio has now compressed to around 64 to 68, reflecting silver's much faster price appreciation. There's even a nickname for silver: poor man's gold. As gold climbed past $4,000 per ounce, many retail investors found it prohibitively expensive to buy physical gold. Silver, even at $70, remains accessible. You can own real, tangible precious metal without needing thousands of dollars. This accessibility has brought a wave of new buyers into the market. Subscribe Global Snap and stay connected for more informative videos.